Hi, I want to talk to you today about the market and what's going on. And in this slide here, investing in 2026, what we really want to talk about is economic outlook. We want to keep you up to date on the economic outlook, what's going on with interest rates, technology and AI. We've been talking a lot about that, the geopolitical situation, how that affects your investments, and energy in all areas of energy. And the reason we want to do this is so you can make better decisions in your investing, so you can see a better return on your investing over your lifetime. So our next slide here shows the current oil prices. It actually looks at a long-term trend going all the way back to 2000. And what I found interesting in the 2000, the average price of West Texas crude barrel, that's a unique price only to the United States and lower than the rest of the world. It's one of the reasons why oil is cheaper, or gasoline is cheaper in the United States than the rest of the world. But in the 2000, the average price of a barrel of oil was $45.20. In 2010s, it was $77. In 2020s, it was $71.30. Where are we at right now? Well, as of the 14th of July, the price of oil is kind of coming back up at $78.34. So if you look at the long term, it's really right around the average price that we paid in 2010. It is affecting inflation, but it's not really astronomically high. And therefore, we don't see it as having that big of an impact on the economy, at least right now. Our next slide here shows really what the professional investors' sentiment is. So like if you were to ask what do other professional investors see, currently 31.4% of them are saying that they're bullish. 26.4% are neutral, and the majority, 42.3%, are bearish or negative. And that is actually a counter indicator for us. Whenever you see most of these investors being ultra positive, like in June of 24, you can see 46% were positive at that time. For us, that's the time to be more cautious. But when it's at 31% and the majority of investors are negative at 42.3, that's actually a positive sentiment. And so we see that as a positive for the current market. Our final slide actually has to do with the VIX. Now this is the amount of volatility that the market is showing. And whenever the VIX is real high, like you saw back in March, where it's hitting 30, 32, it's a time to be cautious in the market. But currently the VIX is all the way down to 15.03. And in fact, whenever it's below 18, it's usually the crossover. If it goes above 18, we think you should be cautious. And if it falls below 18, you really want to be more on the bullish or positive side. So if you'd like to learn more about the market and how to take advantage of what's happening in the current economic conditions, give us a call. We'll be glad to help.